This is a pay package that shareholders approved once. This Delaware judge has overturned it, and now it's going back to the shareholders again. How will you vote your shares?
Biggest AI project on Earth is autonomous driving. And of course, Tesla is in the pole position for that.
You know, the fundamentals for Tesla are in a tricky position right now, and we generally expect negative revisions.
All that and more. So let's get to it. Wow, look at NVIDIA go. A $3 trillion market cap. In the past year, NVIDIA was as low as $375. Truly quite remarkable. I get a lot of, oh hustle, you missed the NVIDIA train. Did I? Well, the picks and shovels are nice. It's the gold I'm after. And surprise, surprise, TSLA is down in the pre-market about 0.5%, sitting at 174.10. Kudos to Jensen Huang and everybody over there at NVIDIA. It's looking more and more likely that Tesla won't be able to become the most valuable company in a decade's time without their efforts in the AI space. Considering Tesla is just a little over $500 million market cap, it'll be quite the trek when Tesla reaches, then surpasses, this $3 trillion market club.
Our next guest is going to be weighing in on Elon Musk and Tesla, the markets, and much more. We want to welcome billionaire investor Ron Barron of Barron Capital, the chairman and CEO there. And Ron, it's always great to see you. Thank you for coming in today.
Judy said don't use the word billionaire.
You didn't. You didn't. Unfortunately, we did, because we have to call it like it is.
All right, multi-billionaire. Fine.
Yeah. Hey, before we jump into what you think about Tesla and the pay package, whether you're going to vote in support of that, why don't we talk about how much you own? Because I was looking, and it looks like I've known you've been a very long time holder. Some of your funds own 2.7%, 3%, 2.8%. The Barron Partners Fund is almost 30% long position in Tesla. So you are a massive shareholder.
It's also $13 cost, so...
A little bit of a humble brag. The testicular fortitude to invest in Tesla at that time frame, well, I guess he's earned it.
So we've owned it since 2014, 2016. Between 2014, so I met him in 2010. 2014 and 16, it took me 4 years. He said, what took you so long? 2014 to 16, we invested $400 million. Made about $5 billion at the peak. Now we made about $4 billion. Sold about a quarter of our stock 3 years ago.
How much do you hold now, though, in total? How many shares?
I don't remember the number, but it's a big percentage of our assets. It's 7 or 8% of our assets in total.
So what do you think about this pay package? This is a pay package that shareholders approved once. This Delaware judge has overturned it, and now it's going back to the shareholders again. How will you vote your shares?
We're voting for the package. He was, you know, when we started, these numbers are pretty cool. When we started, when I met him in 2010, they were doing 2,000 cars a year. And then in 2014, it was 31,000 cars. That's when we started buying. In 2016, 76,000 cars. Last year, 1.8 million. So significant growth.
Talk about growth. Now, I get it. This year hasn't been nearly as exponential as even I have thought it would be. And that's okay, as long as they're capitalizing on all the innovation that's happening in this space. And hell, even in the innovation that's not technically in their space. Robotaxi has been part of the plan for quite some time. But given the success of NVIDIA, things are changing in that space quite rapidly. Everyone's buying the picks and shovels from NVIDIA in order to mine the gold that will not only be quite lucrative, but has the potential to change the world as we know it. While the growth of Tesla's vehicles has slowed temporarily, I firmly believe they will be the largest producer of automobiles the world has ever seen.
So significant growth. And he made promises if he met these metrics of EBITDA, of revenues, of market cap, that he would get this extraordinary compensation. And the compensation, when he started, when the contract was signed, it was the company's market value was $53 billion. It got as high as $1 trillion, and it's now $550 billion. I think in the next 10 years, we're probably going to make 4 or 5 times our money again in Tesla.
I remember thinking at the time that the compensation deal was a crazy setup, but I also remember thinking at the time that I never thought he'd hit any of the metrics.
No one
He's
did.
hit every one of the metrics. So it's hard to imagine taking that back and clawing it back.
Exactly. And so that's exactly how we viewed it. I said, man, if he hits this is fantastic. We're going to do so well. And again, I mean, he should have another contract going from this point going forward, where he's incented the same way, I'm hoping.
As a CEO, Elon Musk is the GOAT, as evidence to him hitting every metric in that 2018 pay compensation plan. Hopefully the board has already figured out what this next pay plan is going to look like, and once we can get this other one out of the way, a highly incentivized Elon Musk is what the shareholders need from Tesla, and the world will greatly benefit from a motivated Elon Musk.
So 73% in 2018, 73% of the investors approved it. All of the disinterested parties who are directors, they approved it. And the people he has who are directors, these are not flakes. They are Larry Ellison, one of the wealthiest men in the world, Hiro Mizuno. He was the head of the Japanese pension fund, the largest pension fund in the world, $1.5 trillion. Kathleen Thomas, Walgreens, Boots. So he had really, and of course Robin Denholm, who came later. But they all approved this, and they all thought this was a fair, a fair agreement. So basically, number one, all the disinterested directors approved it. Number two, that's the will of the company. The will of the company and the will of the shareholders. So I think he should be, it's a legally binding contract. And then who sued? You had an individual who was a shareholder for hire with 9 shares, sued. And it took him 5 years to get the derivative suit certified, but class action wasn't, so he doesn't really represent all the shareholders. And the lawyer who represented them, when you talk about getting lucky, he has applied to the court for payment of $5.6 billion. $5.6 billion. And then he is asking for the payment to be made in shares of Tesla stock, which are depressed because of this lawsuit. It's crazy.
That's the world we live in, Ron. That's the world we live in. A deal is a deal. Pay that man his money. Once we get this pay package out of the way, we can focus on grander things, like the next 5 to 10 years. Laying out benchmarks for a highly motivated Elon Musk is definitely in our best interest as shareholders. If I had to place a bet, which I guess I kinda am, I mean, I've put all my chips on TSLA. If I had to place a bet on who would extract the most from artificial intelligence, it would be the big-brained engineers over there at Tesla and Elon Musk.
Biggest AI project on Earth is autonomous driving. And of course, Tesla is in the pole position for that.
What? I would say they're not just in pole position, they're running laps around this bitch. Other companies doing autonomous driving still haven't figured out that they don't need LiDAR. But I suppose when it comes time to licensing FSD, removal of those expensive and unnecessary sensors will be a much welcomed activity.
We were struck that the Chinese government invited Tesla to work with Baidu's Apollo on its autonomous effort. Now, obviously, Baidu has been working on this for quite some time, but clearly it isn't where the Chinese government wants it to be, and so it's invited Tesla in. So Tesla is our largest position.
It's odd that Ron Barron and Cathie Wood both have Tesla as their #1 positions in their funds.
Autonomous driving, that entire ecosystem globally, including China, is going to scale from a revenue point of view from really essentially nothing now to $7 to $8 trillion. And when you talk about revenues, just to put that in perspective, global GDP is about 130 trillion dollars. So this is going to move the needle in the next 5 to 10 years. And half of that revenue, 3 to 4 trillion, is going to go to the taxing platforms like Tesla.
I wonder what $3 to $4 trillion of revenue would do to Tesla's market cap. And this is just one aspect of this multifaceted company. As a user of FSD, I'm indeed a believer, anxiously awaiting software updates and improvements in the software. But let's not forget that they're the largest producer of battery electric vehicles on the planet, in addition to growing their energy division exponentially. The most robust supercharging network on the planet. Sure, the automotive gross margins have declined, but they're basically the only company with positive gross margins for autos. All that tells me is that their manufacturing is leaps and bounds better than any other auto manufacturer. And let's not forget the humanoid robot, which could potentially break the equation for GDP.
Well, there may be even bigger problems for Tesla as it reports cooling sales and the overall EV market is slowing down or showing signs of it. While annual EV sales do continue to grow, the growth rate is dipping according to Cox Automotive. It says first quarter sales rose 2.6% year over year, but that was far below the 46% growth seen in 2023. My next guest sees a few themes at play here, including China, hybrids, pricing, in what he is calling an EV winter. Joining us now for more is Dan Levy, Senior Autos Analyst at Barclays. Dan, welcome. Good to have you with us. Is the EV market globally too beholden to government policy? In other words, subsidies on the one hand and penalties on the other for cars that don't live up to certain emissions or mileage standards?
When we think about what's driving EV penetration, the analogy we've used is, carrots, sticks, and tambourines, right? How do you get a donkey to move? Carrots, sticks, and tambourines. How do you drive EV penetration? Carrots, sticks, and tambourines. Carrots and the sticks are government. And so for the foreseeable future, government is going to play a very critical role in driving that uptake. Certainly from the carrots, whatever incentive subsidies, but also from the regulations. And that's just not going away. Even if it's slowing or it gets pushed out, there is still a regulatory mandate in places like the US and Europe especially.
Carrots, sticks, and tambourines. I kind of like that. The tambourine must be feel good, right? I mean, I guess you feel good when you buy an electric vehicle. I suppose you feel even better when you buy a Tesla because it's the best thing on four wheels.
It's hard for me to believe that ultimately no internal combustion engine automobiles, new ones, will be sold in this country in 10 years.
By the turn of the decade, it's going to be painfully obvious that making internal combustion engines, that juice won't be worth the squeeze.
It's going to be fluid. There's a balance between pushing for decarbonization, but also recognizing where consumers are and where automakers are in this journey and the cost considerations for them.
I just want to talk for a moment, Dan, about Tesla losing share. You're seeing it in China, you're seeing it in Europe, you're even seeing it in the U.S. Where does that leave the stock?
The fundamentals for Tesla are in a tricky position right now, and we generally expect negative revisions. And part of that is the volume outlook has certainly come down. We're at flat volume this year, and even that, some people would say is going to be tough to achieve. And next year, it's modest volume growth. I think part of the challenge here is that they are relying very heavily on Model 3 and Y. And as good product as they are, there is a model concentration challenge.
Right.
The U.S., it's natural that they're going to see some share erosion, just given how strong a share position they're at, roughly half the market. That's just a function of lack of competition. But Europe and especially China are very competitive. So they'll remain a leader on the EV front, but the competition is tougher and they have a bit of a model concentration challenge.
You heard the man. Tesla's growth has been truncated and the demand just simply isn't there. Nobody wants the Model Y or the refreshed Model 3. Once the competition truly arrives in the US, Tesla will just be a footnote in the EV transition story. Oh, how the Tesla haters wish that were true. Under the guise of a slowing EV market, the best vehicle sold in 2023 was the Tesla Model Y. Don't you find that odd? That EVs aren't growing nearly as fast as anticipated, yet the best-selling vehicle on the planet is a battery electric vehicle. You have to ask yourself, why do these data points conflict each other? Or you could just take the low-hanging fruit and say that EVs are a fad, hybrids are going to be the future, and you should short the most valuable auto manufacturer on the planet. Best of luck with that line of thinking. I myself will continue to use every spare dollar I have to purchase more Tesla stock. In conclusion, Ron Barron, Cathie Wood, these people have Tesla as the number ones in their funds. Despite all the fear, uncertainty, and doubt peddled by the financial news media, they continue to remain steadfast in Tesla's goals, spearheaded by one of the greatest engineers of our time, Elon Musk. Now, Elon Musk has already created substantial generational wealth for many shareholders. But according to these two mavericks, he's not done yet. Auto analysts like Dan Levy consider Tesla to be in trouble. This was supposed to be a growth company, but now has no growth. You're gonna have to forgive auto analysts like Dan Levy. They only can see one aspect of the business, which for years they've considered unsustainable from a Tesla lens. Volumes aren't growing exponentially. The auto gross margins are coming down. Forget the fact that they're the largest producer of battery electric vehicles with the highest auto gross margin. Tesla will never fit the mold. In fact, they're gonna break it. That's all I've got for you today. Be easy. Peace.